We are back with the final end of day PulseWave report for the week for trading on Friday, October the 27th through the 28th of 2022. All right, so let's jump right into what we got going on. All right, so the first chart here is XME. This is the Spiders Metals Mining ETF, and as you can see, the market is now giving you a crash alert for Friday. And so going forward over the next 3 to 5 days, we expect for a downward sloping price action in the XME. Switching over now to the euro, and you will see here that we got a continuation pattern to the upside. The market has gotten deeper into the initial profit target objective. Now it just needs to get above 101. A nice solid close above 101 would set the stage for a nice rally going into next week. Next up is the pound sterling, which has been all over the place this week. And as you can see, the market is still marching higher as well. A nice solid close here above the 115 handle is considered bullish for this particular instrument. And I'm expecting a continuation pattern in the next week if the market can get a good solid close above the current resistance point, which I do believe is possible, and that's around 115.59. So a nice close above that tomorrow would open the door for further rallying going into next week. But what about the US dollar index? Well, it's still right now being distributed. As you can see, the market is in correction mode. It's already hit the initial profit objective of the top of the Kumo cloud. Now we're looking at the 108, which is the bottom of the Kumo cloud. So a nice solid close below that 110 handle should open the door for further downside going into next week for the US dollar. Excuse me. Now looking at oil. Okay, so no relief at the pump as now we have a rally alert for tonight and tomorrow's trading. Initial upside profit objective of bottom of Kumo cloud has already been met. Now we're gunning for the top of the Kumo cloud, and that should put the price action around that $90 a barrel. A strong close above the $90 psychological resistance threshold would swing the door open wide for a run back at the highs. That's right. A run back up into the 130s. I know, my goodness. Get ready for that. Next up is gold. All right, so looking at gold, as you can see here, the GLD is facing a overhead resistance zone right now. We'll call it 1680, 1690. But the psychological overhead resistance for gold is going to be that 1700 mark. And as you can see, the price action is trying to get there. So if the rally can extend itself, then hopefully it can get to the bottom of the Kumo cloud, which would require a close above 1700. All right, that is going to be the big deal going into next week. All right, next up we have silver. So looking at silver here, silver is flirting with the $20 an ounce handle once again, but that is where our current resistance is for this security. So silver is going to need a strong close above the $20 per ounce threshold in order to open up the door for a rally back up toward the 25 and 30 handle. That's going to be a big deal going into next week for silver. Can it do it? We shall see. And taking a look here on the crypto side of things, looking at Bitcoin. So Bitcoin, unfortunately, now is giving off a crash alert for tonight into tomorrow's trading. Looks like the upside rally has run its course, and we're not going to get to the top of the Kumo cloud of that 22,000 handle. It looks like we got some selling that is coming our way in Bitcoin. And then last but not least, looking at The Ethereum, same thing, crash alert for tonight and tomorrow's trading. Not looking good going into next week, looking like the market's topped out. The Ethereum pretty much got to war, pretty close to that 1600 mark, and that's where the secondary profit target overhead resistance zone was located. And now the market has since backed off from that. So it's looking like we have significant downside risk going into next week. All right, so that leaves us with the zillion-dollar question that everybody wants to know, and that is, what in the heck is going on with the tech sector? I gotta tell you, man, it's not looking good. Earnings have been abysmal, and so the tech sector has been getting punished. Here's Meta. So you had a crash alert coming into today. Market gaps down humongously, hits a new 52-week low. And what does this mean? This is bad. This is saying that you can expect significant selling to occur in this. Now, I know we got to deal with the back and fill of the huge gap down, but who's to say the market's finished selling yet, where it's going to exhaust itself and then come back and fill this gap? We know at some point the gap will be filled, but right now it's looking like this thing wants to fall all the way to pieces. So Meta is looking awful right here, and I do mean awful. Okay. As far as Alphabet, Google is concerned, another big tech giant. Here you go on this one. I mean, you tell me. You had a crash alert coming into today, and yes, you hit another 52-week low today in Google, and it did it on a gap. Look at this humongous gap, but the market's not done. I think this bar is what you're going to see tomorrow in Meta. All right, let's take a look at Amazon. A lot of selling. It's like the markets are topping out and locking back in on the downside. Looks like the bear is relocking, reclaiming the bear market rallies and saying, we're done and it's time to fall again. Here is Amazon. Crash alert coming into today. If you get the reports, you would have seen this, and you saw the rundown today, and we have a crash alert for tomorrow as well in Amazon. That's why these reports are priceless, ladies and gentlemen. We tell you in advance, all right, what's going to happen. 24 hours in advance, sometimes 72, 48 hours in advance. But the one thing they have in common is it's in advance of the moves. All right, here's the QQQ NASDAQ 100. Ouch. Get ready. I hate being the bearer of bad news. All right, so here you go. Here's your QQQ. Now, the QQQ is actually neutral. There is no sell signal on this chart. You're in a bear market, and the market could relock in. That's what the threat is right now on the techs, is that the market can relock in. The bear market can come back and reclaim the price action and drag us down. Right now, the bulls are barely hanging on to the QQQ. You're in a neutral zone. All right, this is not a sell signal. You're in a neutral zone. All right, I can't stress that part enough. It's neutral. All right, not saying that the price action will not move down lower. It probably will because of Amazon and Google and Meta, just to name a few. All right, so just saying. So let's see here. Let me take a look at. I see you. You want to look at the SQQ. Well, let's see if we can get anything from that. Let's take a look. All right, here's the SQQQ, which is the inverse ETF for it. Now, earlier I talked about in the trading room that there was it looks like we're getting an algo shift, a major one across markets. And this is kind of confirming that a little bit here. All right, so in your SQQQ, you had a rally alert coming into today, and then today you did get that explosive upside movement. All right, so Yeah. Will it continue into tomorrow? Probably, being that this is switched from a bearish to a bullish bias in the market. Chances are it will probably trigger tomorrow. Yeah, probably will run. Yeah, Twitter, that Twitter deal, the update that came out on the Bloomberg is that Twitter is going back public. I'm sorry, private. So no more public. I know, weird, right? I can't recall a time seeing a stock that was a publicly traded company that leaves publicly traded and goes back to private. But that's what they said on the Bloomberg today. So here's your Twitter, and you can see how Twitter had this enormous bar, enormous rally, and then it keeps going up, and that's because it's going from public now to private. I have no idea what that really means. If you own shares, once the last day of trading comes, are they just going to cash everybody out, or do you get to hold those shares? And if it's not going to be publicly traded anymore, how? I don't know. I mean, do you have to request a stock certificate from your broker? And if so, if you ever wanted to cash out, how do you even know what the value of those shares will be? What if you want to get out of the, there? Let's say for some odd reason, profitability goes away and the thing is worthless and goes out of business. Wouldn't it be nice to get out of it before it crashes and goes to zero? So there's risks when a company goes from a publicly traded stock to non-listed and private. You're on your own on that one. I wouldn't know what to tell you or how to even begin to advise you on that one. I'm not a financial advisor, so I don't know what to tell you on that one. That's a risk you have to take up with your financial advisor. They can advise you as to how that will go, because I haven't the foggiest idea. All right, looking at the Russell My Hustle, okay, ticker IWM. You can see here that I've already showed you the neutrality of the Nasdaq, but look at the neutrality of the Russell. All right, the bulls are still hanging in here with the Russell as well. Not saying that prices can't go lower, but for right now, you're still in a bullish zone. I know it's weird, man. It is weird. It is weird, weird, weird. Don't know how to explain it, except for you can only got to take what the market gives you. I know there's a divergence with the Dow and the other indices right now. I mean, the Dow at one point was up almost 400 points today, while the Nasdaq was down like over 300 points. So it was just really weird. I haven't seen that kind of divergence since 2007. All right, here is the Dow getting above the top of the Kumo cloud, and um, all it has to do is close above there tomorrow. If we can get a close above $325 a share tomorrow in the diamonds, the DIA, then that means the Dow is ready to rock and go even higher. I know, weird, right? So far we haven't seen any sell signals, only bullish to neutral signals. But just let's look at the S&P 500. Maybe the spiders, the SPY, has some information for us that could be quite interesting. Let's see. Nope. Bullish to neutral for this one as well. Dude, it is wild up in here. Seriously, I don't see how anybody can trade without the pulse waves. I'm so glad I have the pulse waves. I don't have to try to figure out all this stuff. I just read the report and I do exactly as the report tells me to do, win, lose, or draw. And you know what? I hang my hat on that. It has done me well for decades. All right, so here is your nat gas. All right, the inverse ETF for the nat gas. Well, first of all, this is nat gas ETF UNG. We came into today with a crash alert, and then we got the downside production today and another crash alert for tomorrow. Now, the inverse ETF for UNG nat gas is cold. It's K as in King, O as in Oscar, L as in Larry, D as in David. Okay, so cold, spelled with a K instead of a C. All right, that is the inverse ETF for your nat gas. And as you can see, we had a crash alert. A rally alert coming into today, and we have another rally alert for tomorrow in this inverse ETF security. All right, so this is looking interesting as well. All right, I owe you. Yeah, Boyle is one of the long ones. Yes, Boyle is one of the long ETFs for the nat gas. There were several ETFs for nat gas, but a couple of them went away. There was Credit Suisse, which was the 3x ETFs. Those are no longer with us. Okay, so here is your Boyle. All right, and you had a crash alert coming into today. You got a crash alert for tomorrow. All right, then you wanted to see UEC, so that's the uranium. Let's go ahead and pull that up. All right, so here is the uranium ETF UEC. And as you can see here, we have a crash alert for tomorrow's trading on this one. All right, everybody, you got your marching orders. The reports are out, so be ready for that. You go to your dashboard, and you should be able to find it. I know we had some issues this morning, but those issues have since been fixed, so no problem there. You should be able to log in at pulsewavetrading.com with no problem. All right. Oh yeah, the Yang ETF. That's the FTSE China Bear ETF. And as you can see here, and that is on the report, by the way, it gapped up a week ago. Then we got a crash alert. We got the downside. Now it's flip flopped, and now we have a rally alert. Who knows with this one? Just follow the report on this one. All right, folks, I got to run. Do me a favor, smash that like button and go to pulsewavetrading.com if you haven't already done so. Take the 14-day challenge free of charge. Trade alongside of us. Receive these reports and see how much money you can make trading with the most powerful trading tool on earth, the PulseWave methodology. And remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And I am out. Peace.